In this video, I'm going to introduce a new feature to Cifico animations, income, and this is going to allow you to tell a lot more stories with clients and prospects. Here we are on the animation screen. How did I get here? I took a life insurance illustration file, placed it on the client manager, and I press play, and that blue circle has all the transposed information when it plays out. The green circle is the nest egg, represents all other financial vehicles outside of life insurance. You can key in all sorts of variables very quickly. But the main event are these colors on the timeline. See, age 40 is for our client's start age, goes out to 100. And the purple, mustard, and red on top of that timeline, that's the income. And the income can be used to show pensions, Social Security, annuity payouts, even some sort of settlement or cash flow like we have here. This income isn't going to make a lot of sense because I wanted to encapsulate everything that the income can alert you to in one animation. Just bear with me, you'll see what I mean. So we can always play the years slow to tell a story whenever we see an issue that income brings up. So let's press play. We're grossing $50,000. We take out taxes of 8, so that red's going to go away. Left over with $42,000. Expenses are that mustard color, so that's going to go away. And then we have a net of $22,000 left over, but we're contributing $43,000 and change to this nest egg and to our life insurance policy. So it's bringing us below the timeline into a deficit of $21,900. So if you see a year like this, you're alerted that there's a problem with the plan. Now, of course, we would never let anybody contribute this much to go into a deficit. I don't even know if that would be possible. But again, just trying to let you know that when you see it in a deficit, you can go back to that year and tell the story and play the animation a little slow. But in the meantime, we can pause this, and I'm going to stop motion through the years very quickly. So we're going to age this client. Keep your eye right there on that $21,900 deficit. It's going down because I have their income increasing over time. And now we're looking for a surplus. And there's the surplus here. So let's go back and let's play the story of this year. Let's press play. Grossing 125, so they have, they're making more money, paying their taxes. The red goes away. Their expenses, the cost of living went up, $45,000, so that goes away. Left over with $44,000 and change, still contributing to the nest egg and the whole life policy. And that's going to leave them with about $400 in a surplus this year. And so you'll see that's going to stay on the top of the timeline. Again, we can inspect the years that the income is alerting us to. This is a different kind of year. It's a surplus. Keep your eye on that surplus. I'm going to stop motion again. And you can see those years have more and more surpluses as we go. So I'm going out here to age 71. So if we see years that are deficits, that's bad. We need to correct it. And if we see years that have surpluses, well, this is money that was left on the table that we probably should put up to these assets above. We should contribute to them or create another asset to contribute to. So more storytelling and more conversations you can have with your client. Let's press play here. This is a special year as well. There's no income from 71 to 100. So this person doesn't have a pension or any kind of annuity. Let's press play. Expenses are up to $73,000. So that mustard brings us down into the deficit. I can see the whole life policy has got some red growth markers. So its cash and death benefit are going down because it's going to make a distribution of $58,000. Not enough to neutralize the deficit. So that would be a year of concern again. And then I'm going to skip over here. Let me pause this and go to age 75 because I think this is the year where both the nest egg and the whole life policy contribute. So expenses now, $80,000 a year in deficit. And now our whole life policy and our nest egg are going to contribute. So the nest egg is going to take out $150,000. They're going to pay some taxes. $105,000 comes out. And there we are. We've got $25,000 in surplus. We add $58,000 on top of it for the whole life policy. And in that year, we can see that we were brought out of the deficit. And these are the assets that contributed to it because they're color coded. And I'll play the rest of this a little bit faster and just bring up the stats card while it's going. And over here, you can see you have all the itemized stats for each of the assets on the screen. Green nest egg, blue life insurance policy, and then you have the income right over here, purple. And then you have a summary here. When you have income on the screen, the summary in the stats card changes. It becomes a lot more sophisticated. And I think if I stop motion this, I'll put this off, I'll pause it. I'm pretty sure that nest egg runs out. And this is the last notable year here. I'll slow it down one more time. No more nest egg, it ran out. Expenses have leveled off at $80,000 a year. And this whole life policy is going to do the best that it can to neutralize that and bring us into a surplus. But I don't think it will be able to do that, obviously, because it's only going to give $58,000. If you noticed, I went through this entire video in one take. It's not because I'm some great speaker, but these animations lend themselves to articulate speech and storytelling, and they'll really wow your clients and prospects. So maybe that'll help you in your practice or some of the advisors you oversee. If you have any questions, please reach out. Until next time, good luck at your next meeting.